Welcome everyone. Today I wanted to do something a little bit different. I wanted to analyze the percentage of people that are hodling Cardano. So this is a little bit of a back of the envelope calculation. I'm not sure if all my calculations are correct. I've never done this before, so I just tried to think about this in the most logical way. I started first with a couple of stocks and then I moved down to crypto. Once again, please let me know if I'm doing anything wrong, and I will definitely shoot another video depending on what mistakes that I'm making or what assumptions that I'm making that are incorrect. But for the most part, I think that I am onto something. So the first thing that I did was I analyzed a couple blue chip stocks, so mainly being Facebook and Berkshire. Why did I choose Berkshire? Because I feel like a lot of people that are invest in Berkshire are people that are hodling their Berkshire shares for long term. People that follow the Warren Buffett um, principle, they know that they are going to be here for the long run. So they're trying to beat the S&P 500, and they're holding those shares for long periods of time. And then I took a little bit more of a novel company. Although Facebook was released a while ago, it's definitely newer than Berkshire. So given these parameters, I calculated the current price. And once again, I used Berkshire Class B shares. Did not use Berkshire Class A because I would think that Berkshire Class A are probably even more tight than Berkshire Class B because not many people can afford a Berkshire Class A share. And Class A share, I believe it's in the hundreds of thousands of dollars. I believe it's probably 210,000 or 250,000. I'm not 100% sure. But Class B shares are $210 a share. Facebook shares are $178.35 a share. Then I found out the average volume for the past 30 days. So this is the number of shares that have been traded. So in the case of Facebook, it was 24 million. In the case of Berkshire, it was 4 million shares traded. So given that information, I multiplied the current price by the average volume to find out the exact volume in US dollars of trading within the average trades in the 30-day period. So every day we could assume that there's around, I believe this is 4,280,000,000 $400,000 US dollars for Facebook, and for Berkshire it is I believe it's $842 million. Let me just make sure. 842 million dollars. Okay. Then I found the market cap for these particular companies. In the case of Facebook, it's I believe $513 billion, and in the case of Berkshire, I believe it is $519 billion. So both of them have extremely large market caps. They're $500 billion. And once again, stocks work a little bit differently than cryptocurrencies. So market cap is inverse. I had a video about that in cryptocurrency realm. So whenever you think that, oh, it can never reach 500 billion, it doesn't work the same way as stocks. So that's invalid. Okay, so once again, and then I did a calculation. I basically took cell D2, which was the amount in fiat for the average volume for those 30 days, divided that by the market cap, and then found the percentage. So the rest of the shares that have been untouched. So if the average volume for trading for Facebook is $4 billion a day and the market cap is $513 billion, then the percentage of shares that are not really moving is 99.16%. So that's the percentage of people that are hodling their Facebook shares. So and then 99.83%, even higher for Berkshire, as I had the assumption before that there would be a higher number of hodlers within Berkshire. So why is this the case? It's only a few people day trading. It is a few people day trading, and the majority of people are holding their assets, holding their stocks for a long period of time. In this case, almost it's only about 1% that are trading day by day for Facebook. The rest of them are locked in ETFs and mutual funds and IRAs and um, every single investment vehicle that you can think of. And most of these companies, most of these ETFs, they're not going to get rid of their Facebook stock or their Berkshire stock. They keep it long term. If you look at like a fund like QQQ, it holds the majority of the biggest tech stocks, and it's just been riding it for the past like 5 years. So they are definitely long-term thinkers, and I think that we need to apply the same philosophy to the stock market, to the crypto market. So moving on to crypto, I took Cardano and figured out what percentage of people are trading on a day-by-day basis. And this really goes to show you how nascent of a market that this is. So for everyone that's saying that this is a bubble, this is a peak, um, you know, the percentage of people that are actually trading day by day is a lot less than what you assume. So I took this information from CoinMarketCap for the past 30 days, and basically it's the volume and the market cap. So I averaged them out. So for Cardano, we have an average daily volume traded for of $63,904,030. So as you can see, some days we're trading over $100 million a day, and some days we're trading, less than obviously 63 million, and it averages out to $63,904,030. And just to give you an example, that's 63 million. The average trading volume in a company like Facebook is 4 billion, and the average trading in a company like Berkshire is 842 million. So that's like a factor of 10 at least. And if those volumes were applied to Cardano, it wouldn't 10x. It would probably like 100x or 1000x, because there's a multiplier from current stocks to crypto. It's not the same. It's not the same metric being used. Then I took the average of the market cap. So the average market cap for Cardano was $3,005,200,502. So that's the average market cap for the past 30 days. And using this information, I determined that the percent hodling are 97.87%. So it's really, just above 2% of people that are trading it. 2 point, let's say 2.2%, 2.1, 2.2% of people that are constantly trading their assets. And this is actually what's been moving the price this much. I know this is only for the past 30 days, so it would be interesting to see if I did it for a year analysis and see how those changes, how many people have entered and exited the market. But this really shows you exactly the percentage of people that are selling and trading. It's been going from 9 cents to 11 cents to 10 cents. There's so much volatility. I mean, these are like 10% swings, just based on a couple percentage of people that are actually trading. So, but it also goes to show you that there's a large percentage of people that are hodling the crypto. So when I did my whale video, it's not a lie. These people are holding their cryptocurrency, and it's not even just the whales. It's the whales, the sharks, the fish. There's a lot of people that really truly believe in this cryptocurrency and are just holding. They're not trading, because otherwise the percentage hodling would be a lot less. And this is a very nascent market. So until we reach those 99% levels, where people are not actively manipulating the markets and trading, we're still a very nascent market. And like I said before, if that volume was infused into cryptocurrency, that $4 billion, the volume of, let's say Cardano's volume was $1 billion, averaged $1 billion, prices would be astronomical, because it's not the same multiplier effect in crypto as it is in stocks. So let me know what you think. Let me know if you want me to analyze this in a deeper scale. Let me know if you maybe want me to compare the percentage hodling with maybe Bitcoin's percentage hodling. it would be interesting. Maybe I can do a graphic or something. But also let me know if you think I made any wrong assumptions. I'm not an economist either, so I play around with Excel and see what's going on. But these numbers look correct to me. So, but once again, I don't know everything. So please let me know if I'm doing something wrong. And please like, comment, and subscribe. Let me know if you like this video. And have a great day until the next video. Thank you.